Every year, millions of Americans pay thousands of dollars in federal taxes. But here's something most people don't realize. There are completely legal strategies written into the U.S. tax code that allows some to reduce their federal tax bill, sometimes all the way to zero. Not because they're cheating the system, but because they understand how the tax system actually works. The IRS tax code is filled with incentives designed to reward certain behaviors, like investing, saving for retirement, and starting businesses. The problem is, most people never learn how to use them. So today we're breaking down 4 legal ways some Americans pay little to no federal income tax. Explained simply. Before we start, it's important to understand something. There's a big difference between tax evasion and tax optimization. Tax evasion is illegal. Tax optimization simply means using existing laws and deductions the way they were intended. The U.S. tax system doesn't just collect revenue. It also encourages certain financial behaviors, like investing, saving for retirement, owning businesses, and supporting education. When people structure their finances around those incentives, their tax bill can change dramatically. Let's walk through 4 simple strategies built directly into the tax system. Strategy number 1. Using retirement contributions to reduce taxable income. One of the simplest ways Americans reduce federal taxes is through tax-deferred retirement accounts. When you contribute to accounts like a traditional 401k or traditional IRA, those contributions often reduce your taxable income. For example, if someone earns $100,000 and contributes $20,000 to a 401k, their taxable income drops to $80,000. That means they're paying taxes on less income today while their investments grow for retirement. This strategy doesn't eliminate taxes forever. Taxes are usually paid during retirement withdrawals. But in some situations, retirees withdraw money in lower tax brackets, meaning they pay much less tax overall. Strategy number 2. The Health Savings Account, HSA, Triple Tax Advantage. Health savings accounts are one of the most powerful tools in the tax code. They have a triple tax advantage. That means contributions can reduce taxable income, investments grow tax-free. Withdrawals for qualified medical expenses are tax-free. Some investors even treat HSAs as stealth retirement accounts by investing the money and letting it grow for decades. Over time, this strategy can reduce taxes significantly while building long-term savings for healthcare costs in retirement. Here's something surprising. When several tax strategies are combined, some households can reduce their federal tax bill dramatically. In certain situations, their federal income tax liability can drop close to zero. And that brings us to the next strategy. Strategy number 3. Tax credits that directly reduce your tax bill. Most people are familiar with tax deductions, which reduce taxable income, but tax credits are even more powerful, because tax credits directly reduce the amount of tax owed. For example, certain credits related to children, education, home improvements can significantly reduce a household's final tax bill. Some credits are even refundable, meaning taxpayers could receive money back even if they owe little tax. This is one reason why households with similar incomes can end up paying very different amounts. Strategy number 4. Business deductions and expense write-offs. The tax system also provides incentives for entrepreneurship. People who run businesses may be able to deduct certain expenses. Examples can include home office expenses, business equipment, mileage used for business purposes, professional services. These deductions reduce taxable business income, which can lower the overall tax burden. Of course, all deductions must be legitimate and properly documented, and tax rules vary depending on business structure. But this is one reason many entrepreneurs approach taxes very differently than traditional employees. The U.S. tax system can seem complicated, but at its core, it follows a simple pattern. the rewards behaviors the policymakers want to encourage. Saving for retirement, investing, starting businesses, supporting education. When people understand these incentives, they can structure their finances in ways that reduce their tax burden, while building long-term wealth. And the biggest difference between those who overpay taxes and those who optimize them is often simply knowledge. If you want to better understand the financial systems that shape your money, from taxes to investing and wealth building, subscribe for more videos. Because the more you understand how the system works, the better decisions you can make for your financial future.